Buy the dip, buy low, sell high, buy when others are fearful. These are basically the first things that all beginner traders learn. The major issue is that it's too easy. As you've probably learned by now in your trading career, things that are too simple like that simply do not work to create consistent profitability. You can turn on an RSI indicator such as I am showing here, buy when a stock is showing oversold or less than 30 on the RSI value, and you would be buying low. If it were that easy, we would all simply do that and we'd all be millionaires. Unfortunately, it is not. You may notice on this chart behind me here, I am plotting some white arrows on some of these dips, and you'll notice that it isn't at every time the RSI value crosses down below 30. That's the secret we're going to talk about to add an extra layer to this to actually turn this buy the dip idea into a profitable one. So look at the chart I have loaded in here. We're looking at the waste management daily chart. And you'll notice here when the RSI crosses below the 30 value, the stock is trading at $153 a share. Well, it continues down while the RSI is trading below 30. It continues all the way down to a low of $138 a share before ever bouncing. That does not make this entrance here on the initial cross below 30 a very profitable one. Now let's zoom out on this chart and find another condition in which the RSI crosses below 30, but the stock continues dipping harder. Here we have an instance where when this stock crosses below 30, it's trading at $114 a share, and before it begins bouncing, gets down to a low of just $85 a share. That once again makes buying in this area extremely unprofitable. So you can't just blindly buy dips. That's the lesson here. However, did you notice something about the dates on both of these areas that I just selected? This is occurring during March of 2020, which is of course peak COVID lockdown. The other example that I showed was happening during 2022, which was during a bear market in the S&P 500. If I go over and look at the SPY chart during both of those times, right here is the 2020 COVID lockdown, and then this period here is the 2022 bear market. Coming back over into the waste management chart and circling those same exact time frames, you will see now the central idea behind this custom study that I have built. We want to be buying dips on stocks in strong markets. That is where so many beginner traders get owned, is that they want to go just randomly buy these dips without the larger understanding that the entire market is pulling everything down. So those dips are way less likely to bounce. What you want is the market to be helping to pull your stock up. You want those tailwinds behind your stock. So if you can find a stock that's dipping in strong markets, your win percentage on buying that dip is going to skyrocket. So let's come in to the custom study that I have built, and clicking into the settings cog here, you will see that I have two input parameters. One being the target RSI, meaning whichever stock you are currently charting, the RSI value must be less than 30 by default, and the second being SPY RSI. If you don't know, SPY is an ETF symbol that tracks the price of the S&P 500. So essentially, the S&P 500 must have a RSI value above 50 by default. So the target's RSI, we're looking for less than this RSI value. For the SPY RSI, we're looking for greater than this RSI value. And I've created these as input parameters so that once you import this study code into your own ThinkorSwim application, you can easily come in and adjust these numbers and find what works best for you. For example, let's say I only want to see these buy signals if the SPY RSI is greater than 60. So SPY is really strong. The S&P 500 is really strong. When I hit apply, of course, I'm going to expect there to be less results. Right now on waste management, I only see one result, but the confidence in that result should go up. I mean, you buy the close of this candle at $108 a share, and you get a pretty immediate run up to $126 a share. It's an 18-point move, like a 15% move right after you buy this dip. You'd be pretty damn happy with that. Now, we're far from done with this video. We're about to jump in and build a scanner so that you can actually find the stocks in which this scenario is currently true. But first, I got a question for you. Do you think that having a study like this on every chart that you run could help you make just an extra $45 over the course of your trading career? Well, boy, do I have good news for you, because $45 is all it costs to import this custom study from my website, daytradingstrategies.net, into your own ThinkorSwim application. And as an added surprise, if you thought this one simple study could help you make $45, well, you also get access to 150 plus other custom ThinkorSwim coded studies, scanners, even trade strategies. You can sign up for a monthly plan. I always am adding new codes to the website, at least one a week. It's typically 3 or 4 a week. That's why I have it set up as a subscription. Or you can sign up for the annual plan. Obviously, with the annual plan, you're going to save yourself some money. And more importantly, you're going to get lifetime access to a Discord server full of other people that are utilizing ThinkorSwim codes to continue that conversation around. So if that sounds interesting to you, daytradingstrategies.net will be linked in the description down below this video. Now let's talk scanner, because of course you don't want to just be randomly clicking through stocks in the stock market and hoping that one of these buy signals exists. You want to be able to scan for them and know exactly what you should be analyzing further. Well, really the first step here is to make sure that the RSI value on SPY is greater than whatever the value you found to work best in your testing. My default values for SPY are that it is above 50. Well, right now the SPY RSI is at 57. So the overall market is bullish enough, with enough bullish tailwinds, that I want to be looking for dips in individual stocks. So that means right now is a good time to run the scanner we're about to build. So I've got a couple of my standard stock filters turned on. Just don't show me any stocks that are trading less than $1. Don't show me any stocks that are trading less than 1 million shares of volume on the day. But a very important third stock filter I'm going to turn on for a trade setup around a buy signal like this is as follows. I'm going to turn on the market cap in dollars, and I'm going to say, don't show me any stocks that have a market cap smaller than $50 million. I don't want to see really like small, low float companies in this scanner, because they, for the most part, don't really care as much about what the overall market is doing. If the whole idea of this buy indicator is that we want to be finding dips on stocks and being able to grab onto the tailwinds of a bullish overall market, then we want to kind of ignore things that aren't affected by the overall market, right? So those are my 3 stock filters. And the meat and potatoes of this scanner is, of course, a study filter. And we want to see when the RSI value is less than whatever you set up your target RSI value to be. So this is really simple to do. I'm going to come into the pencil icon here. I'll come into the edit button on the condition wizard. And on my left-hand side, we are going to look up a study. We're going to look up the RSI study, and we're going to say that it is less than. And on our right side, simply value. And once again, my default value for this indicator is 30. That's where I'm going to go with. Once again, I want you to take this study. I want you to tweak the input parameters. I want you to find what value works the best for your own personal trading goals, and obviously plug that value here into the scanner. So now we should only be seeing stocks that, of course, trading greater than $1, trading over 1 million shares of volume with a greater than $50 million market cap, that currently have a daily RSI value less than 30. I actually didn't really touch on that while going over the study. Maybe I should have, maybe I will here in a second so you can see visually. but you could run this study on any time frame you wanted to, by the way. Just like I showcased that it would run on any ticker, it'll run on any time frame. So if you wanted to use this as sort of a day trading scanner instead, all you would need to do is click on this box here, change it down to an intraday time frame. Then your check would be that the whatever 5-minute RSI is less than 30. In fact, let me real quick go over and let's just take a look at I don't know. Let's go back to waste management and let's go down to the 5-minute time frame and see if there are any signals being painted, just so I could showcase that. The internet in my office is being really slow. Let me see if this loads. All right, it finally loaded in, and back here, this is from like a few months back, but waste management, you can see on the 5-minute chart when it was below 30 on the RSI, and obviously also if you're looking at SPY, should be greater than 50 on the RSI in that same time period, you would be getting these buy signals, you would be interested in buying this dip. So back within our scanner now, we have 6 results. Let's go ahead and take a look through them. I will say the first result on the scanner, this WRD, you can see here in the description of it that this is an ADR ticker. ADR stands for American Depository Receipt. I'm like 90% sure of that. Anyway, what that basically means is that this is just the ticker for trading this company on the American market. It's a foreign company, and this is, once again, how it is traded on our market. So the values of it and the then thus technical analysis of it isn't actually representative of what the company itself is doing. It's just what this ADR is doing. We go over and look at the charts. You can see here, obviously the RSI is actually below 30, but it's an ADR. Maybe the actual company itself chart doesn't look exactly like this. I would simply ignore an ADR result like this on my scanner, or really on any scanner that you have a technical chart setup like this set up for. Important lesson there. Thus, the crux of it is, let's just skip over this stock. Next, we have UNH, United Healthcare. I know this stock just got owned on earnings. In fact, they did. But let's take a look back at the history of this thing. There's even a couple of me on this side. If you were like buying the dips here when UNH was below 30 and SPY was above 50, you've done pretty well. These all represent pretty nice dip areas on this ticker. Now, will this one be the same? Who knows? This is a little bit of a different scenario. Once again, UNH just got hammered on earnings, so maybe that changes the picture for you a little bit. But now that you've run this scanner and you have this study turned on, you now are aware of this weak stock, even though, once again, the overall market is relatively strong right now. So potentially buying dips on UNH during a strong market might not be a bad idea. I'm not telling you to go do that, but the point of the scanner in the study is simply to make you aware it exists. The actual analysis and buy decision is all, obviously, the impotence is on yourself. The next stock is MYGN. If I go load up MYGN, see this one, once again, does not look very good. This one's just been getting slaughtered for a while. I wouldn't really then be looking to go out and buy the dips on this thing. You can actually see a history here, and this is important. As soon as I load this in, people will probably go, wow, Trey, this study sucks. The point isn't ever for a study to be always right. If I could build you a study that was always right, I'd charge you $100,000 for it. You would happily buy it because it would make you a millionaire in 6 months. That's just never going to be how trading works, right? But the beauty of being able to see something like this visually on your chart is you now have a history of, okay, this study doesn't work here. Like, this stock just kind of sucks. Like, even when this stock is weak and the markets are strong, it's not enough to pull this stock up. So that immediately tells you, like, once you saw really these arrows here fail, you would not try to buy any of these arrows. You would not be trying to buy these arrows. Knowing when not to buy a stock is just as hell, if not maybe even more important than knowing when to buy it. So that's a pretty good example of that on this chart. Just one that has a history of not working. So let's avoid this setup this time. The next stock on the list is CHD, another one that is gapping down really hard. I would assume this is on earnings or some other type of news. But once again, now you are aware that there is a big company, at least greater than a $50 million market cap company, that is very weak while the market is strong, which may be providing you an opportunity. In fact, this symbol has been painted on this chart a couple of times. This was a few years back, but these were both pretty great dip buying opportunities on this name. Will this one be? We'll have to see moving forward, but it is nice to at least know that it exists. The next one is GPK. This one you can see has a pretty nice past history, at least with this bounce here from $26 up over $28.50. A very nice bounce there. And once again, the stock is gapping down, likely on earnings. I'm making this in the midst of kind of the big earnings week for this quarter. So I would assume this is another earnings gap down. But once again, big, large company that is weak while the market is strong. Those are things you need to be aware of as an active stock trader. And the third and final is BDX. Once again, you can actually see a really nice history of this indicator working on this chart. Nice dip buy, nice dip buy, nice dip buy, two more pretty nice dip buys. This one even on one of those large gap downs that we're seeing a history of the stocks on the scanner right now, gave you a really nice dip out of from the 230 range up over 250. And now once again, just getting a big move down, once again, assumedly on earnings. And it's once again nice to be aware of this ticker's weakness amidst, once again, what's the whole point of this study and scanner? The market strength. You're looking to buy individual ticker weakness while the overall market is strong. For the over 1,700 of you already signed up to the site, or those that are about to after this video, I hope you make good use of both this study and scanner, or if you can't afford to sign up for the site right now, that's perfectly fine. I just hope you take the ideas from this video to, yes, look to buy dips on stocks, but only when the overall market conditions suggest to do so. If you learned something in this video, please take the half second to hit the like button. If you would like to continue learning, make sure you subscribe to this YouTube channel. And with all that being said, I'm going to go ahead and sign out of today's video, and I'll catch you all in the next one.